Hi everyone, it's Matt McLennan with Kidder Mathews in Tacoma, Washington. Thank you for watching. We're sitting here in the first week of March and it felt timely to give everyone a general market update video on what's going on here in the Seattle-Tacoma industrial market, but also looking at the macro economy and the national industrial market and how that's having its impact here. So I believe it's important to look at the past, the present, and the future and see what was the reality of the end of 23, what was everybody thinking for 24, what's happening currently in 24, and then what are we projecting here in the future. So starting with 23, if you look at some of the stats here, generally speaking, it was a down year. And when I say a down year, I mean down year over year statistically speaking. By all measures, if you ask me, I believe 23 was still a healthy year for the market. It was not robust like it was in past years, but still healthy by several measures. We did see demand tick down, but across the board, we didn't fall off the cliff, which I think is important and worth noting. A lot of the projections of all the big national companies, including ours, was that looking to 24, coming out of the end of 23, that 24 would not be a recessionary year, that we would achieve this soft landing that everybody likes to refer to. And so far, a few months into the year, it does seem like that remains to be the case. Everyone was projecting at the end of 23 that the Fed would start cutting rates in 24. That remains to be seen. Everyone then, just a few months back, believed that that would happen in the second half of the year. Now a lot of people are projecting that it might not happen at all this year. So that'll have a huge impact on probably how 24 continues and really how the year ends. That's been the biggest driver of our commercial industrial market for the better part of now going on 2 years. So, and then currently looking ahead, I mean, really, what are the two assets that everyone seems to feel are the safe havens at the moment? It's really industrial and multifamily. The investor sentiment amongst those two, cap rates, values, rental rates, and what everyone's projecting forward, those are what are getting the most interest at the moment. And I believe that will also continue into 24. Another component of what's going on right now really is demand. That is probably the number one thing I'm hearing in all my conversations with clients and investors at the moment is where is demand and where is it going? Demand's down. I mean, you could go look statistically, you could just talk amongst the streets and figure it out. Demand's down, and consequently, vacancy has been ticking up. We still have new product getting delivered to the market, which is also not necessarily getting absorbed right away, which is also continuing to increase the vacancy rate while demand continues to drop. And I believe this will probably continue through 24. In talking with tenants, most are focused on stabilizing their businesses coming out of the pandemic years. Most are focused on stabilizing their costs, and a lot of those costs relate to their real estate occupancy costs. I mean, we've been getting the question for years now, mostly from tenants, of when are rents going to drop? And to date, it still really hasn't happened on a dramatic basis, but I would argue that that is a tale of two stories. And so when it comes specifically to rents, I would say there's one side, which is the Class A, well-located, very functional industrial buildings, and those buildings are still achieving great rents, mostly keeping their face rates high and really at record levels or growing. They're offering more concessions in order to land tenants, but generally speaking, those rates are continuing to hold. Flip the script to Class B buildings, maybe in inferior locations with some kind of functional obsolescence that don't compete with the Class A product. Those buildings are struggling to get tenants, and they're also struggling to maintain their rental rates. So most of those landlords are hyper-focused on let's get tenants in the building. Don't care if we have to drop some rents or give major concessions in order to land them. We need to get these assets stabilized. So it'll be really interesting to see if that continues in 24. I anticipate it will. If you look at industrial development specifically, because that is a big tell for the future of our general markets, keep in mind that most development has years of lag ahead of it, right? So in most municipalities, it takes years to purchase land, entitle it, get permits, and then eventually develop and actually deliver the product. So we're sitting here in 24 still seeing product getting delivered today from past years of work during more robust market times. And so consequently, that new supply is going to continue to increase vacancy, like I mentioned, if demand stays down. However, the backlog of industrial supply that we've seen in past years is going to be I don't want to say non-existent, but very close to non-existent in future years like 25, 26, 27 and beyond, because as soon as those interest rates started rising in 22, developers, generally speaking, hit a pause on entitling new land, mostly because you couldn't make it economically feasible. So I've been of the opinion for quite some time now, and I still stand by this prediction, is that in future years, assuming the economy continues to improve, stabilize, and then improve, that we are not going to have this supply backlog like we've had in past years. Consequently, demand will pick up, and if we don't have the supply to support said demand, then our vacancy rate is going to trickle back down, rental rates will probably go back up, and we'll be experiencing similar market conditions to what we experienced leading up to the pandemic and coming there shortly out of it. So that'll be another really interesting one to watch. Another factor to keep an eye on in 2024 will be supply chain volatility. If you look at a lot of the big players that track this very closely, there are concerns being discussed about continued volatility in the supply chain. We all experienced what was arguably the maximum level of volatility during the pandemic period. We've all felt that things have stabilized since. However, between issues at the Suez Canal, amongst others, generally a lot are predicting that there might still be some volatility in 24 that does have a major impact on our supply chains. And really going into the holiday season, which for most that don't understand supply chains, that really starts to happen in the summer. That'll be very telling as to how that impacts our space markets. The East Coast ports have a union negotiation that is coming up this year. Between that and some of the volatility that I already mentioned, a lot of experts are predicting that more import-exporting will be happening out of West Coast ports this year. So another interesting factor to keep an eye on there. I believe the best way to sum this up is to say that I, for one, am generally optimistic about 24. I indicated previously that 23 in my mind was the year of the Great Reset. I believe we've mostly achieved this reset. There's still some stabilizing that needs to happen. There's the big question of have we hit the bottom or not. I have a question mark on that one too, if I'm being honest. But generally, 24 feels like it's going to be a more stable year. I'm optimistic that it'll be a healthy year. Will it be as robust as past years? Arguably not. There just doesn't seem to be any indications pointing in that direction. But if we do potentially see some interest rate cuts at the end of the year, that should be optimistic and helpful for the market. We are going into an election at the end of the year. That usually tends to have a big impact on consumer sentiment and activity in the market. So that'll be another really interesting run to watch. I mean, by all measures, 24 is going to be a roller coaster. So hope you're enjoying the ride. I am. As always, would love to hear your opinions. Please let me know in the comments. And if you have any questions, always, you can reach out to me directly. And thank you again for watching.